All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, we're going to go over ZIM's report, the financial results for the second quarter of 2023. Today is August 16th. It is the long-awaited day for ZIM and their earnings. And as you can tell, holy smokes, guys, we're down 10% on August 16th. That's today. I actually am a holder of ZIM. What I'm going to do in this video is I'm going to show you guys my position in ZIM, and we're going to digest this down 10% mark that we have today. We're also going to go through their earnings, what exactly happened. I have some comments made by Ilya Glickman, who is the CEO of ZIM. Hopefully I said that right. But I also have one thing to show you that I'm actually kind of excited about for ZIM and why. Look, this is a long-term play. In the short term, ZIM is going to go through some hardships, but I'm going to show you why I do think ZIM is going to be good for the future. So that does sound good. Please do stick around and subscribe to our channel. We're up to 1,894 subscribers. I am so grateful. I hope we get to that 1,900 subscriber mark soon. Our previous video was first out of 10. So congratulations, guys. That is awesome. Up on the view duration, the click-through rate, everything. Even the views, 1.9 thousand views. Awesome. Over 100 likes. Absolutely can't complain. So thank you for that, guys. And subscribe if you do want to see more videos like this. Currently, my portfolio is down 21%. We've been having a really rough week, as you could tell just even here. If we're going down here, I know MPW had a rough week. It is now down to $7.47. But today we're talking about ZIM, and it's down to $12.21. Let's even see what it's down in the past 5 days, because it was trading at roughly $13.50. It had like a decent little run up here in the past month, going from like the same marker, about $12 to about $14, $15, but then absolutely pretty much tanked down to $12 back again due to their earnings report, which happened today. So digesting that, what we're going to do here is look at it. So they expected a negative earnings per share of 88 cents. It actually came in at $1.65. So it's a surprise of 87 cents to the downside. Now, one thing to keep in mind here was look at their March. This is their Q1. So when looking at their March Q1 earnings results, they had an expected revenue of about $1.6 billion. It came in at $1.37 billion, right? They had an expected of $1.35 billion, and it came in at $1.31 billion, slightly less than the Q1 earnings. Now, I know a lot of analysts on ZIM were predicting this to be a pretty decent size like downturn. As you can see, the expected earnings per share was a lot less than the previous quarter, and freight rates for the most part were trending to an all-time low. Like you could even see here, literally underneath $1,300 for freight rates, which definitely played a factor in ZIM's earnings, as ZIM is highly dependent upon those rates. But just even going in and digesting their financial results and what happened here. So they entered a net loss. And the thing is, actually, I could go on Yahoo Finance and we can compare, but the most recent quarterly earnings aren't out. So you could just see Q1 here. But going to their website here, so a net loss for the second quarter was $213 million. So that is the net earnings per share. And another thing to look for is the operational loss was $168 million. So comparing that to the very last quarter so their operational loss was $13.5 million in Q1. In Q2, it was $213 million. So that is a pretty significant difference here. And another thing was obviously the operational loss was $168 million, which was right here, 168 million as well. So that is okay. Never mind. Their net income's down here. I'm all over the place. 60 million was their loss last quarter, and it jumped up to over 200 million. So that is a pretty big increase there. Something to be concerned about a little bit. Now, one thing I do want to say was going down here, you could see their average freight rate for Q2 here, 2023, was 1,193. That is significantly lower than last year's Q2, which does make up for this significant decrease in like the net income and the operational income. One thing I do want to say though is ZIM's CEO, he makes a good point here. He says, we continue to take proactive steps to respond to the current market realities with a focus on minimizing costs while operating our commercial strategy. We have taken action to realize our existing capacity and routinely review our services to adapt a network to customer preferences to identify new commercial opportunities. So they're still looking for new opportunities. And what he says here is very important. He says, although our second quarter results reflect continued near-term challenges, so short-term challenges, not long-term, in the container shipping market, our total cash position of $3.2 billion at quarter's end remains strong. So they are still holding about $3.2 billion in cash, just going back to their cash of the previous quarter. So they were holding about 3.2 billion. It's probably going to be slightly less, maybe about 3.1 billion, just due to the fact that they were down on their net income and will have to pay out of their cash a bit. But you can see they're still holding strong at about 3 billion. And this is a company with a market cap of roughly 1.5 billion. So they have double their current market cap, which is probably about $24 per share if you're looking at it in that sense. But as you can tell, everything is pretty much down. You can see their net income down. This is 2022, so the previous quarter, and last year's Q2. But their net income is way down at over 200 million, and their free cash. Okay, their free cash flow is still 321 million. So it wasn't. That's not terrible at all. Yeah, that's pretty much it. One thing I would highlight is those freight rates, and one thing I am excited about for ZIM. This is a bullish thing on ZIM. ZIM stock price for the past year or so, just even scrolling out to the 1-year chart, it has followed the freight rates. And unfortunately, freight rates have been down. That was due to the COVID crisis, which really absolutely blew up ZIM Integrated Shipping. And it's been on a downtrend ever since. But what I did notice was that freight rates are going up on a little bit of an incline, increasing to $1,500 per, pretty sure this is 40-foot vessel, 40-foot container ship. So with the increase in freight rates, you'll see an increase in ZIM's earnings. That is one thing to look out for. So this is a little bit of a bullish sign if you're going on ZIM. As I did mention, their CEO is trying to navigate the short-term problems that they're going to be facing over the next few years, current year, and could be potentially leading into 2024. But I do think ZIM does have some room to recover. Currently, going over my position here, I hold 26 shares. I have a high average share price at about $28.91. I haven't been buying any more shares just because I've been reinvesting in Tesla, and I've also been reinvesting into Clip as well. I might actually look to purchase some more shares of ZIM and get that cost basis a little bit lower, just due to the fact that freight rates are increasing a bit, and that is a bullish sign on ZIM. That is what I want to see, because when freight rates increase, their revenue increases as well. And you know what? The fact that ZIM had an average freight rate cost of $1,193 per the 40-foot container is a very low marker. You could see, we'll most likely see this increase as long-term freight rates were decently higher at about the $1,500 to $1,700 level. But this is just a short-term navigation that ZIM must learn to get through in order to be profitable, in order to really grow their company for the future. So long-term, am I really worried about ZIM? No, I'm not worried about ZIM. They have a massive cash balance, which can hold them through this current downturn. Do I think they will recover eventually? I do. They're a company that's been around since 1945. I know that just by reading through their About ZIM and the investor relations. They're a company that's been around forever. They've been growing their fleet. One thing is they rent their ships, and that's their strategic advantage. They don't own very many ships. They rent them, and so in times like this, you're not going to see these massive downturns, or sure, we've seen the $200 million loss, but that could be a lot worse if they did own the ships. They only lease them. And so they kind of can mitigate their loss through that. So all in all, I'm going to continue to hold my ZIM shares, my 26 shares. I might look to add, and I'll definitely make a video if I do so. And I just want to say, I hope you guys are content with your ZIM shares. Let me know what you guys are going to do, whether you're going to buy, hold, or sell. If you do own any ZIM, what you think about the future of ZIM. And I just want to hear your opinions, and anything would help. So please don't, hesitate to comment below. So I hope you guys did enjoy this video, and I hope you guys, obviously enjoyed going through the earnings with me. I do want to say I hope you take care, and yeah, I will see you guys in the next video, and yeah, take care, guys.